welcome and good morning to all of you. I hope you enjoyed the first day, which was dedicated specifically for the bankings. Moving ahead, we are going to discuss insurance whole day today. I have a number of panelist speakers from the world of insurance going to talk about different aspects of the insurance. To begin with, the first panel today is specifically about insurance leaders' view, specifically on building businesses over hyper-personalization. And let me introduce the best minds that I have for you specifically on this panel discussion. My first speaker for the discussion is Ms. Vishakha, RM Vishakha, MD and CEO, IndiaFirst Life Insurance. Ma'am, glad to have you.
Pleasure to be here, Amol. Thank you for having me.
My next speaker is Mr. Amit Malik, MD and CEO, Aviva India Life Insurance. Amit, glad to have you.
Hey, Amol. Morning, everybody. Glad to be here.
Thank you. My next speaker is Mr. Anand Roy, MD Star Health and Allied Insurance Company Limited. Anand, glad to have you.
Thank you. Good morning, everyone.
Thank you. And my next speaker is Mr. Ramesh Srinivasan, the CEO, India Business Network. Ramesh, glad to have you.
My pleasure. Good morning and look forward. Yeah, thank you.
Thank you. So, ladies and gentlemen, I have few specific questions and few common questions, and we are going to discuss in detail the customer's experience and the hyper-personalization as a theme of the event today. We have seen a lot of changes in the insurance industry as well when it comes to customization. Now there are insurtechs and insurance companies coming together and even crafting policies like, the cycle insurance or the tour insurance or one-day picnic insurance, and a lot of things are happening at that end. But to begin with, I have a common question, and the question is, customers are not the same anymore. How are you actually catering to the demands of the new age customers rather than what kind of customer experience they are demanding? And Vishakha, I would like you to take this first question.
Customers' basic needs, especially when it comes to life insurance, doesn't really change.
Mm-hmm.
If you go by the fact that life as such in terms of a life cycle of an individual doesn't really change. What is changing is maybe the demographics. Earlier people would get married, they would have children. You don't have that certainty any longer that they will get married, they will have children. Maybe the nature of relationships is changing, but a fundamental need of most people stays the same. What we are seeing thanks to the pandemic, or what we are seeing in general because of the advent of technology, is the way it is approached. Not that the needs are changing, but how are those needs going to be met? What is it that we're going to use? Is the life insurance agent still relevant? Is even a bank assurance still relevant? Does the distribution change completely? And do products change accordingly? I think term has become far, far more popular than it ever was before. A pure risk cover that was really not there pre-privatization. Forget about anything else. It was only the private companies which actually brought in the concept of a pure life insurance. Then with aggregators like Policy Bazaar coming in, and now with their IPO listing that they've done, you see a lot more of people being aware of a pure risk premium. So I think the awareness has increased to a certain extent. The way people work or interact or buy or services is changed, and the industry has changed accordingly.
Okay, noted your points, Vishakha. Anand, your perspective, please.
So let me speak from the context of health insurance business, because that's what Star Health is into. I think personalization was always an important, area of. We were always looking at avenues. How do we personalize health insurance products to various segments of the society? Mm-hmm. And one of the very apt example is the COVID insurance, which was launched at the peak of pandemic,
Right.
Regulator and also by a lot of the companies. That was hyper personalization to the hilt, catering to the demands of the particular time. But going a little back, as at Star Health, we have always been trying to find out how do we segment customers and make the offerings more relatable to them. For example, we brought out products for diabetes. People
Right.
who were living with diabetes for a long period of time, they didn't have scope for health insurance earlier. We were able to launch a product for them. Similarly, people who are having other ailments like cancer or cardiac ailments, So these were very well accepted in the society at large, and we saw a lot of uptake of these products. We also did personalization of age groups. For example, senior citizens policy. There were earlier one product was catered to all segments, but then we brought about products which are looking at the senior citizen segment, and we saw a real good uptake of those products also. So personalization was always the core of our belief. But now, as you rightly put it, Amol, now we are moving into hyper-personalization, more granular. And this is something which is very, very interesting times. And with the advent of technology and more data available to the insurance companies, I think hyper-personalization, apart from the product design stage, is also very, very relevant in the health insurance sphere in the services side. And I would like to spend a little bit time talking about it as we speak on how we are able to bring hyper-personalization in our services. Thank you.
Amit?
Yeah, I think I'll start by saying that hyper-personalization is not new to insurance. So if you look at historically a successful insurance sales person, what did that individual do? That individual took all the products that the individual had, bundled it up, looked at the needs of the customer, and then sold it saying this is for you and this only caters to your needs. That was always there. I think that like Vishakha said and like Anand said, the manifestation of that has changed with evolution of the customer today. And for us, it is very important to understand where the customer is. Vishakha did touch upon it to say the life goals of the customer has changed today. It's not about marrying, having kids, doing a pot of gold at the end of life for the wife or for the son or for the daughter. I think all that is there, but what is changing is the life goal. What do you want insurance for? And I think those life goals are changing in the younger generation, which is the first part to know. The second is, as you look at the lifestyle changes that are happening, there is a rise in consciousness of health, and there's also a rise in lifestyle diseases to counter that. So, that whole piece, how does that get balanced? And Anand did touch about it in a little way, saying how he's got products to it. But that again is leading to what the insurance companies will have to cater for when they do products for their customers and personalize. But I think more from a product standpoint, the hyper-personalization is going to have an impact on your pre-sales to the customer and post-sales to the customer. I think that is where, the large impact is going to come in, I think that's where I would leave it at.
Okay. Ramesh, how do you look at it?
Well, I think I heard Vishakha, Anand, and Amit, and all of them brought out the importance of having the customer and customer segmentation very well. Insurance companies have always adopted to having multiple products. They're very quick to respond, be it a COVID or be it a demographic need or responding to the Gen Z's requirement of being on app and fulfilling that very, very quickly. What we have seen is that I think some of the aggregators were the first movers who brought in a lot of insurance companies to a single place. So that was the first step. And then we as a company, as a marketplace company, in the sense that being in the marketing technology space, we saw that a similar pattern emerging from each of those companies, which became very clear that while they were in the aggregator space, and Vishakha mentioned about a recent IPO. But what is also important is how to keep the loyalties going directly with their customers. And that's when the hyper-personalization really kicks in. When you use, all the data, whether it's demographic, age, experience, need, be it health or or life or non-life insurance, and bring that all together. And I'll start with a simple example. I have a few vehicles, I have a life, I go to an aggregator, and I sometimes feel that I'm not a part of, I'm treated individually each time. While the experience of using it fantastic, but I wish somebody just put me as a single view and give that. And I think that's where the hyper-personalization really kicks in. And it's more important now when you're dealing, as the time passes, we will have more of Gen Z being the customers rather than the middle or Gen X or Gen Y. And when that happens, the experience has to be completely different. So that's my first views on all 3 points, very valid points from each of them. And I think insurance companies have always been very sharp and fast to get onto that, digitization. And we have very good customers in that space adopting that very, very fast.
Yes, please.
When we talk about hyper-personalization, right? And I feel there is a basic fundamental question that needs to be asked, which is why?
Right.
And where is hyper-personalization really relevant?
Right.
It's insurance policies are not like a cup of coffee.
Mhm.
So where you really need the hyper-personalization at that level, your protection of your life is protection of your life. It is a pure risk premium. How much hyper-personalization are you going to make that basic product need?
Right.
So the hyper-personalization, I think, is something that my panelists have already mentioned, and I think it's about the delivery part. How is it delivered? Which is changed? Hyper-personalization is really not about the product. It is
Right.
not about the proposition, but it is about the way it is delivered. I think that's what we need to.
I think
Right.
I just wanted to add on, Amol, before we move on.
Sure.
I think what Vishakha said was exactly the thought as I was listening my fellow panelists, that some things will never change. Cost consciousness, demand for simplicity, trust on the brand, ease of customer service, those will never change. And I think it is for us that how do we balance that and don't sacrifice that over our bid to join this race of hyper personalization. I think that's also very critical.
Right. Noted your point. So let me shift some gear and let me take cues from what Vishakha said. So, okay, hyper personalization here is in two parts. One is specifically while the companies are trying to craft the policies according to the need of the customers for exactly the short times and all, where the non-life companies are doing their best. On the other side, the customers want the experience at their leisure, at their time, or something like that. So I will come to you, Vishakha, and I want you to answer in this part that when customers are actually looking forward to buy policy on the mobile app, looking forward to buy policy at their convenient point and not exactly the branches which may have at a bank or an insurance companies. So what are your views here in offering that kind of superior customer experience, which actually the customer of this generation demanding?
Amol, I would celebrate the day that insurance became a pull product.
Right.
World over, especially life insurance, I will say. And I don't want to have too many views on the non-life part, but I do know that even non-life motor is only bought because people think it's mandatory. A lot of health is still bought because there is Section 80D. But we have experts in the panel in the form of Anand, so I won't venture into the health space. But life, it has become a nudge product post-COVID. Okay. Otherwise, life insurance has been a push product, and it is a push product the world over. This has got nothing to do with India. Even today in the States, life insurance is still a push product. It is still sold and not bought. So the interesting part of it is how valid is the question that when a person wants to buy, how can he buy? Versus if the person is never going to buy, so what are we really investing on? Why is it that all our websites, everybody had a website where they could buy insurance? I'm not talking about IndiaFirst Life. I'm sitting here representing the life insurance industry. So when you look at it as a life insurance industry, you have some of the competitors like HDFC Life and all who invested very heavily into direct sales through websites and through apps and so on and so forth. But you still ended up with an aggregator who ends up with a lion's share of the term life business, which is online. Why is it that way? And I think because it continues to be a push product and they invest and there's a call center and so on and so forth. So what is the process of sale is very important. What I do think, however, technology is enabling, and what I do think that technology needs to enable, and I'm really putting this out there for anybody who has a great idea to take it and implement it, is how do you build an ecosystem around protection? It's not about enabling that individual to buy when he or she gets the feels the urge to buy a life insurance policy. It's about creating an ecosystem. What do I mean by that? What I mean is that if an individual goes to a hospital for an annual health check, is there a premium built into that annual health check which gives him or her, an additional cover? So if I shop on Big Basket, is there a certain part of premium that goes in which ensures that, God forbid, something happens to me, then my family will continue to get groceries from there?
Right.
I work on a fundamental principle in life insurance that money is a means to an end and money is not an end in itself. So when as life insurance companies, we are promising a payout at the end of the policy period or a payout during the policy period in case of death or in case of maturity, that money is used for something. Can we actually fulfill that need itself rather than, having to give only the money back? So I think that is the concept if we can work with, so that, for a customer, what he or she is trying to do is protect the family's food, clothing, shelter, or protect his or her own retirement and medical expenses post retirement. So can we actually create an ecosystem where all of those are taken care of?
Right.
And can we use blockchain? Can we use AI to see how this entire interface can be built to give an ecosystem of protection and not just a product?
Very different view and unusual points, Vishakha. I think you highlighted really well. Anand, I will come back to you and would like to take your perspective in terms of how is it for you, because we have seen major changes in terms of the customer experience and the customer-centric policies in the non-life sector. Again, you come from a health background, but we have seen major changes there. You've been given example of diabetic also some time back. So my question to you is how tough it is for you in terms of you have to cater to different customers going ahead the way he wants to.
Just to add to what Vishakha said, health and life is not very different in India. Both are extremely push products, and to some extent there has been some awareness created post this pandemic, both on the on the protection side, whether it is a health insurance protection or a life insurance protection. Everybody now sees and believes that it is an important investment, and I hope that this will only grow from here for both the life side and the health side. As far as the buying journeys are concerned, Amol, see, people want to buy on mobile, people want to buy online, but still remains a very assisted sale. So what happens is people do a lot of research online, but then eventually they would like to speak to someone and then make a purchase decision. And what we have done is, we have enabled the distributors on the ground who were typically offline distributors have now become tech savvy and online distributors. So all the offline, distributors like agents or bank assurance partners are nowadays using portals and apps and various means so that they are able to take the customer through the product benefits and the pricing quotations and all of that, and then eventually close the business also online. So a phygital model is what is evolving now post the pandemic. We are seeing this adoption happening very, very rapidly. And I think it is in good interest for everyone because the customer is also able to, get a better experience in making a purchase. The insurance companies are also very keen to promote this because obviously over a period of time, this will reduce, OPEX and all of that for the insurance companies. And last but not the least importantly, the productivity of the sales team is also improving. We are seeing that happening. So I think, that's the way I think that the industry is moving forward towards. It's not that every customer is going to, look at making his or her own purchase, but they will be looking at some kind of assistance while making the purchase.
Okay, noted your points, Anand. Amit, you actually, gave your remarks to what Vishakha said. But let me come back and ask you, what is your learning about your customers? Are you seeing a major difference in terms of the way they are demanding right now? Obviously, the push and pull factor is a very important factor, and we can have another debate and a show on specifically push and pull. But what is that your customers are demanding?
So, let me just add on to what both Vishakha and Anand said. I really wish one day comes when life insurance is an off-the-shelf product, which just flies off the shelf, right? We just put it out there, people just buy it out, it just flies off the shelf. I really wish that, and I hope we live to see that day, right? I would really want to. But I think coming back to the customers, I think Anand touched on that. What the customers are asking is, customers also understand that it's not an easy product for them. They may want to go inquire, do some research, but in the end, they want some assistance, some help. What they are saying is, in your customer journey, as you map out the journey, the drop-offs between the digital and the physical part of the buying journey has to be minimized. That's the first task, saying minimize those drop-offs and handoffs. Because if you look at the current journey, there are drop-offs, then you go back on digital, then there are handoffs, and the policy gets issued. The second thing that they are saying is, when we talk to somebody, we want an individual who's aware, educated, knows the company process very well, and can guide us seamlessly. It's one, getting it right the first time in the journey as the handoffs happen. I think that's the customer demand that is there, so that their experience is maintained, and they're able to do it as quickly as we can support them. I think that's the first part. But that brings to us as an insurance company a challenge as to say how much of investment you do and where you do. Because doing this whole combination of digital, which is digital, physical, has various hands off, and everything needs to be invested. So you need good digital infrastructure, you need good talent, you need good person on the physical side, you need robust processes. I think that's where the decisioning comes in as to how do you make that journey, and that is what the customers are demanding. The other challenge that I wanted to bring in from an industry perspective, while Vishakha shared and Anand shared some pieces of it, is even from an insurer standpoint. If you look at it today, and forget the insurance industry, you look at other industries. We have had recent successful IPOs of not many people, or if you look at Pepperfry, which was a furniture industry. A lot of companies in other industries who've gone purely digital are now coming back to phygital for the customers to have an experience of what they have to offer. So that customer experience is also starting to count in that buying journey, to say, let's give them a pre-sales experience that delights them, so that they know that post-sales they will be delighted by an experience, which is starting to play. And the customers are judging you on that journey, on the buying journey from our side. I think that's important. Secondly, as an insurance industry, our challenge today is, earlier there used to be one or two aggregator players who you could manage and you could sync your system with. Today, there are so many choices for the customer, and it's also becoming a decision point to us, saying where do we invest in and who do we partner with, and how do we decide on our partnership. I think those are the stuff that people are asking. So if out of, let's say, 10 aggregators, you have a great seamless journey with 5 of them, but your customer is on the remaining 5, how do you make sure that you get the same journey to them, irrespective of the partner capabilities? So how do you bring that capability up is again what is the demand of the customer.
Okay. Noted your point, Amit. So, Ramesh, let me take that aggregator part and the partnership point with you. As I see, not only in the insurance, but in the whole BFSI ecosystem, the partnership model is shaping up really well. In fact, platform model is also shaping up really well. So how do you see these partnerships actually benefiting insurance companies in terms of not only distribution, but offering a better customer service?
Let me share with you that I've always felt that it's not an either or situation. So there is going to be multiple aggregators, and there are going to be multiple platforms. While some of the insurance companies, banks will always have a strong presence and loyalties, which can be fulfilled directly. I'm not saying either or is right. To that, I think they're going to coexist, and the market continues to grow. We know that the insurance penetration levels in India still got a lot of headroom to go, and then that will continue to be there. As far as on the previous points, and I'll come back to Amol on what you said. On the previous points on whether it's going to be physical, digital, a combination of two, and what Amit said, where are the drop points, where are the crevasses, so to speak, where people are getting dropped off and where they get picked up from a digital pattern and then re-engage again. I think that's where we are spending most of our technology money as a product companies are. We are trying to make sure that the flow is completely easy, predictable. The nudges are given at the right time. And I say nudge, I don't literally mean trying to push a sale, but more from a customer experience perspective. So we have taken a holistic view of just not the revenue model for a aggregator, and we have both customers, by the way, direct banks and insurance companies and aggregators. So we cater to all three patterns, and we see there is a commonality in all of them. All of them want to delight their customers, not just selling, but also giving that great experience and making sure that they come back. To that, we have created personalization for nudges, A/B testing, and other technologies which help you to do that. Now, that's on the part where the experiences, can it be solely digital? I believe that there are enough banks and enough insurance which are solely digital. While we do have the benefit of a large country with different levels of technology adoption and maturity, hence we will continue to have a hybrid model of physical and digital. There are economies out there where we cater to which are purely digital. And it's in our we see about 10-15% of the behavior in certain products being very high on purely digital. So we do have a full cycle digital offering wherein you really don't have a drop off and pick up, while still there are what Amit said and what Anand said, it has to be physical in certain product lines where a nudge is more physically needed, or assurance of a person is needed, or guidance is needed. Those will continue till the maturity comes into the market, and we have younger people who are more attuned to doing digital business as a second skin or a second nature than that. Now, as far as distribution and banks are concerned, or bank assurance or brands are concerned, I think the nature of the nudge, the personalization or hyper personalization, that's what we started talking about, will continue to evolve with more 360-degree, more customer CDP platforms which are emerging, analytics which are coming out on top of that. And every day the quality of the analytics, the propensity to buy, propensity to sell, propensity to cross-sell continues to evolve, because you're constantly monitoring the digital body language of a person. Now, the big disconnect really is physical to digital. While there is a lot of attributes on the physical side of things that does not get captured, in the digital world, all behavior gets captured. So it's easy to form an analysis and come back with a theory saying that, hey, propensity of this person who's buying family health insurance today, and maybe he also does travel insurance when he goes for a holiday, is high because he has that state of mind. So that level of data and that level of digital behavior is what we work on and provide that to our customers, and those are across partners as well as insurance companies, so that they benefit from that. And that's, I think, is where most of the 360 is happening.
Okay, detailed one, Ramesh, and Vishakha, I will come back to you, and let me tell you, and I will join the celebration with you as and when the shift happens from push to pull. But a lot of developments happening in insurance space, and tech space is far more aggressive. We have seen players which became unicorns within a time span of maybe just 2 to 3 years. So we see a lot of growth kind of opportunities for the insurance business. So my question to you is, considering the customers are looking for a better experience, maybe they are not looking for a insurance, but they are looking for a better experience. My question to you is, are you going to bet really high on the digital distribution? Because still, considering your partnership with the PSU banks, and a lot of insurance companies have strong bank assurance partnerships, will you focus on now the digital distribution more compared to bank assurance model in order to cater to new segment of customers?
Why would we look at digital distribution as something that is not assisted? I think that is one of the things that both Anand and Amit mentioned, that there is no such concept still of a digital distribution full product. I mean, that percentage is very, very, very small. It's very minute. Is that something which you'll always have? Absolutely, because it's a one-time investment. It's not like opening branches. It's like having a website, having a journey on website to fulfill the process, and your shop is open. So that is, it's almost the norm that we will have it. There is no alternate. It's not like, is it banker or digital? It would be banker and digital. The difference, however, and I'll have to answer this specific to IndiaFirst Life, is banker is something that is available to us. It would be an absolutely inappropriate strategy to not focus on bank assurance and to not realize the potential of bank assurance. So we did focus on bank assurance. We did invest very heavily in technology in terms of doing analytics and propensity to buy. We do invest very heavily in the customer, digital footprint, as was being mentioned, to see where the customer is going, what he does. Even on the banking website, we do see what is his or her pattern of behavior, to see whether they'll be more open to pitching of an insurance at what point of time, and all of those. So technology is leveraged very heavily, and without that, I don't think we could have really made this journey that I was mentioning of 130 crores a year to 100 plus crores a month. That journey couldn't have happened without technology. That journey couldn't have happened without analytics and without data mining and without using all of that to identify and meet a customer needs when it arises and at a point of time where the customer wants that need to be met. So banker is that it will continue. We will do deeper and deeper analytics. We'll do deeper and deeper data mining. We will do a lot of predictive models. We will do that entire thing on banker. So that goes. Digital distribution, yes. Now we've felt that if we've done all of this, let's look at where is the investment we want to make. And we do intend to make the investment very heavily on digital. For me, digital is not only about website. It's not only about aggregators. They are both the norm. They're already there and we need to do that. I'm also looking at digital, as I said, in an ecosystem. How do you embed insurance into an ecosystem? So strategic alliances are very, very important to me. So I want to make that journey of insurance at every touch point in a customer life cycle. In the sense, so if you're going for, if you're paying your bills, can you have insurance where the bills continue to be paid even if you're not there? So if you have your school fees, can you have insurance at the school so that those school fees will continue to be paid in case something happens to the individual? So that's the kind of ecosystem that I want to work on. Can you tie up with retirement homes who will guarantee a retirement room or a home to this individual in X number of times? So a lot of those strategic alliances, that is a very slow burn. It's going to take a very long time. I'm putting it out there because the real benefit, if somebody manages to crack it and accelerate this, is to the end customer. I don't think it's about the idea, it's about its ability to implement it. It's about finding the ecosystem partners who are willing to partner with you to implement it. So yeah, I'm putting it out there. So if there are any ecosystem partners out there who want to partner and do something, that's what it is. So yes, we will invest heavily in digital, but not at the cost of bank assurance.
Very valid points, Vishakha. Amit, my question to you is, considering the growth that we are seeing in the insurtech companies in terms of the market value which they're showing, in terms of the the market share which they're obtaining after listing and everything, what kind of business opportunities do you see for them? Because at one side there are traditional companies which has a great benefit of bank assurance, like Vishakha said, they're betting really high on that model also. So considering all the digital footprints which these insurtech companies specifically are, obtaining and trying to build everything digitally, how do you see that business is shaping up?
So you're asking this to a traditional life insurance company person, right?
Right.
But it's a very interesting question. I think what they will be looking at and what their expectation would be as they go into the insurtech is a partnership with the traditional insurance company where speed to decisioning is to the liking of them to be able to grab the customer that they need. So like I said, they would want to partner with companies who are able to give them decisions which are faster. So if they have someone sitting with the customer trying to do a sale, they would want us to give an underwriting decision in 15 minutes to say, I am with the customer wants to buy an insurance. I need you to give me an underwriting decision in 15 minutes so that I'm able to close that sale and do it at the first go and get it right the first time. I think that will be a huge, I'm just taking one example of underwriting, but that will be the huge expectation. The other expectation would be, like Vishakha said, while we will all invest in our digital journeys and operations and websites, when they are sitting with the customer there and at some point when that sale happens on our website, on our platforms, that journey has to be fast enough for them to be able to do that. So that's the expectation they will have of us, to be investing in our own technology, our own self as a company, and then integrating that with the partner so that they are able to close the sale faster. Because no one wants today to go and visit that customer again and again and again because there is too much of outside influence decisioning. So that I think is the first part that will come in. The second part that will come in is, while everyone would want hyper personalization, and it's a little contradictory, but they would also still want product products that their teams are able to simply tell and make the customer understand. So they will want a combination saying, we want a hyper-personalized product, but we want you to still keep it simple. And that's a challenge that will be for us to how do you personalize a product and keep it simple for that individual to be then able to do a sale, because that individual is not very different from someone who we have either in our bank insurance channel or a direct channel or an agency channel, right? It's the same talent that is moving around. So how do we then do those simplified products? The third is, I think there will be a lot more scrutiny as I look at the customer cycle on how complaints and claims are managed.
Right.
You know, today when we have large banks, the banks are demanding of us, how do we do our claims and complaints? It is our partners here, these insurtechs, who will want speed, because for them, it's about speed, it's about solution, it's about resolution. That is what they will be looking at, and that is what they will be asking. Yes, the other thing is that my expectation of them would be that a lot of them look at the insurance universe and try and solve a part of the problem. Our expectation would be to have a partner who's starting to look at the whole end-to-end insurance journey and give us a complete solution rather than a part solution that they have to offer. So how can they partner with us to give a more comprehensive, larger solution suite than the limited solution suite that the insurtechs are individually offering today?
So Anand, I will come to you now, and you are operating in a standalone space. Okay. I know it's a big segment, but considering you operating standalone, you have a lot of partnerships also. What kind of benefit, first of all, are you getting any benefits from your partners? And what kind of benefits are you getting from your partners? Are you able to reach to a next level with the help of the partners in terms of disbursing claims instantly, in terms of selling policies in far more, in numerous manners than you used to do earlier through your distribution channels?
Digital distribution definitely is of interest to us, and as the other panelists have said, it is not either or. All the channels have to coexist, and we have also invested heavily on the digital distribution. I would not speak particularly about any individual partner, but what I would like to say is, we are very selective in the way we go by our partnerships. We are a little conservative. We would like to have few partners, but have large and deeper relationships with them, so that we are able to both the parties are able to get benefited out of that. What we have seen is, customers on the online space and who are actually willing to do the entire purchase journey online without having to go through any advisor or any telecaller, or for that matter anybody at all, is they're looking at straight through processes. That's one of the areas which we have to build, and is coming from a medical insurance, health insurance background. That's something that we have been able to augment on our underwriting engines, so that customers, even if they have diabetes, if they are able to disclose that, can we issue them a policy within let's say 1 minute? That's the kind of experience that we are trying to build, and we are investing on those areas, and that's something that we are doing. But just to touch upon the insurtech space, which you spoke about, apart from the sales side, which is a given, everybody is interested. I am very much interested on the service side, because in health insurance, service is a very critical role, And what we have done is we have invested in a couple of partnerships with some of the insurtech players on, let's say, the wellness side. Okay, and wellness is a very buzzword in the health space. At the younger age group, customers, they expect that there's some kind of benefit for them in case somebody is taking good care of their health. And how do you measure that? How do you submit those data? And how do you ensure that they get those benefits? That's something that we are investing a lot on. And apart from that, a couple of years back, the IRDAI came out with a sandbox initiative, and we were one of the few companies to file a project on the sandbox with a partnership with an insurtech company for auto adjudication of claims, in which claims could be settled not in 2 hours time, but probably in 2-3 minutes time. And that's something. These are the initiatives we are looking at partners on these lines who can add value on the service side to enhance the customer experience as far as health insurance claims are concerned. I think that's something of interest to us.
Okay, sure, Anand. Ramesh, my question to you now is specifically on the emerging technologies. I see a lot of insurance companies are already using, in some manners, blockchain, chatbot, and RPA is already there. AI is already there. Data mining is happening aggressively. What kind of technologies do you think will actually, be far more beneficial, or the insurance companies will adopt in a far more meaningful manner going ahead, considering the different demand that we are seeing in the market now?
Sure. Let me take this in two parts. One is acquisition of customers, being meaningful and being relevant in acquisition of customers. What Amit said is, since the talent pool is same, can you make the probability of win higher? And I'll touch upon that, which is the acquisition of the customers. And what Anand said about, can you make it seamless and easy and have a straight through process which will go through without any glitch? So can that be a vision? And that's what he's working on to ensure that happens for Star, right? And then there is this third part, so which is like, can you have a completely digital blockchain model? And that would eventually evolve to what Vishakha said, that can you have a model by when you plug in ecosystem partners so that the reason why an insurer took the insurance, maybe for education or a monthly expense, etc., goes through the beneficiary for the needs very directly. All these three pieces, if you were to look at it, requires a different set of technologies. And I'm coming from, over the years, I've worked in different sectors of these technologies. So I'm going to try and stitch that together and share with you. Acquisition is aggressive acquisition was one of the reasons why aggregators were very successful. They adopted technology faster. They were able to do this straight through processing of issuing insurance in a quick time. By the time you finish the chat, it was done, and by the time you swipe the card, it was all in your email, and all you had to do was download and keep it somewhere, right? And now there is a step prior to that. How do you acquire these customers and make them ready for that process to make the sale, or be comfortable to have the trust to do the sale, whether it's a brand directly or through an aggregator or through a bank? Now, the digital body language and the way today we have access to information 360 of a customer, and build that out and extend that will help you to figure out what the customer needs, what he's looking for when he visits your website and abandons it. And this is a natural process. Nobody spends hours sitting on somebody's website, right? So you quickly see, then you come back again and you compare and go and check other websites. You come back to the site that you like, you have brand loyalty, and continue. So the first thing that we do is journey orchestration and make sure that he's not starting all over again, and there is a stitching of behavior, which means that we kind of guide him to the place that he dropped off and start that journey very quickly. That starts with a customer experience. Of course, there is an acquisition part, which is all there is to it, not just telecalling, but more digital app behavior and all those things. That's the acquisition part. Now, that's where the journey part comes in. Now, to Amit's point, very valid. Can you have the same set of gene pool of resources that the behavior will be similar, whether it's in bank assurance or in a brand? So how do you make the probability of win for a sales team higher? By providing him pre-packaged information most relevant to the customer, which is digitized. So that part is available from Netcore and few other players worldwide that will continue to be there, and that's going to enhance in a big way, because obviously it's a linear equation with the revenue that you bring in, and hence gets the most attention from a growth perspective. And you said that aggregators are growing at leaps and bounds, and that's one of the reasons, because they take care of that part very well. Coming to what Anand said, can you have a straight through process? Absolutely. I think there is less intervention, less nudges if there is already engines built in to do that. And that comes with, formal declaration. If you have a diabetes, you don't feel have to guilty about it. You don't have to hide it. If you have a diabetes at 50, it's pretty much normal in India. The premium may go up, and that's something that's transparent. So can that be built in a rules engine that will cover that? Absolutely available, and that can be done to ensure that you have, transparency, which is a great customer experience. That's a big brownie point. And then you kind of also boot it with a very quick service as if nothing happened, and it's very normal. That makes the customer feel great. And then coming and extending that to what Vishakha said, can you keep this so secure that over 10, 15 years of time, the need for that with usage of blockchain, which means that it's secure, the contracts can't be tampered, you can't change that, mutate that, and still execute that at the way that you would want it with the ecosystem partner, because these are all contracts that are blockchain in nature and then remain secure and safe, can be done. I think all of that technology still is available and can be done. It's just what, Vishakha, put it out there. Are there partners to kind of have that tie-up? And that's a very vision statement. And all three, Amit, Anand, and Vishakha have brought in these great points that technology can be a great enabler, but then the science behind running the insurance is always going to be with them. Most of the technology folks are reacting and then teaching. So it's always the top 10% will help you to build the technology. The remaining will actually adopt it later, and that continues to be the case. And we've had experiences with multiple, without naming, insurance companies where we have learned, adopted, deployed, and delivered, and then others have caught on. So I think holistically, all pieces can be done. And as in my only thing is, as time passes, that experience is going to be the most valuable for a customer to come back and deal with you. And it has to be, the time frame for buying a health insurance would have, if you look at data, would have shrunk considerably. Over time. The more digitization, the shorter the time. But then when you have a shorter time, how do you kind of enrich that data and make it relevant? I think that's where I think it will all fall in.
A detailed summary of what exactly we discussed, and a meaningful one, Ramesh. I think the time is already up, but before I wrap up, let me take a liberty of maybe 2 more minutes, and I will give 30 seconds to each one of you. Please treat this as a rapid fire question. And we discussed, hyper-personalization, the customer service. So let me start from where let me ask this question from where I had started. And Vishakha, I will come to you. So in the world of, a superior customer experience, obviously the BFSI companies are using advanced technologies like chatbot, RPA, data, AI, and everything. But as we discussed, that the customer demand is also very high. What are the important things that you are going to do to cater to your customers in a far more advanced manner in near future?
One of our customers facing statement is to ensure that we access them in the manner that they want to be accessed and give them as much or as little information as they want to be told. We do want to use humanoids wherever possible in order to be able to communicate straightforward, simple information. We do want to encourage self-service for people who want it, and we want to give the full whole hog service to people who don't want technology. So if you're talking about hyper-personalization, I think that's where it is. We give the entire range. We're not going to be blocking out the face-to-face 15-minute chat to explain what your fund value looks like. And we're going to enable the 30-second fund value view that customers who want to see that continue. So I think we just developing our services in a manner that it will fit across the entire diaspora of customers. That's what it is.
Meaningful. Amit?
I think Vishakha summed it up very beautifully. I cannot say it better than her, but I'll only add there. I think the only thing that I want to do from a customer standpoint is, while we have so many tools of them, I think it's our responsibility to also educate them how they can use it to the fullest, so that the experience is enhanced. I think that education part seems to be missing. A lot of us get the tools, but we tell them what they can do, but we don't tell them how to do it. I think that bridging gap of how is something that we want to focus on to enable customer to experience what we are offering.
Okay. Anand?
Yeah, just to add to my co-panelists, I think what we would like to do is, we are investing a lot in personalization on moving from illness to wellness. Okay, and that's the area where we would like to focus on. We are going really granular. We are creating cohorts of customers who can be, there can be condition management programs for, let's say, a group of customers who had a cardiac surgery done in the last 1 year's time. These are the kind of initiatives that we are taking and managing their health, so that, the cases of getting readmitted in hospitals can reduce. So these are the initiatives. I think hyper-personalization, as we spoke about, using technology, using data will be our way forward.
Okay. Ramesh, you summarized it really well some time back, but let me tweak this part of question for specifically you. So, what kind of customer experience do you think that the insurance companies will? I mean, what kind of technology the insurance companies will require to offer the customer experience which they just spoke about?
Correct. I think it's the ease of use,
Hmm.
the ease of knowledge available, transparency. So right time, right place, the way he wants it, and the experience he wants it. I think the 4 R's of for a customer, the right in that order are super critical to ensure that the it is paced rightly, it's consumed quickly, it is experienced very well for a long-term loyalty. I think that's how I would summarize it. And I think technology today has got a solution, not just Netcore. I'm just broadly saying technology today has a part to play in all of that. And all the insurance companies are fairly high adopters of technology. Like Amit said, how do you kind of make it intertwine and make it, you extract most of it is the question. And that's where I think the play would be.
Okay, noted your points from all of you. I guess that was a good learning for me, and thank you so much for sharing your time and your participation at this first ever session of insurance on the hyper-personalization at ETBFSI Converge. So thank you so much, Vishakha. Thank you, Amit. Thank you, Anand, and thank you, Ramesh, for sharing your perspective. Thank you so much.
Thanks,
Thank
Amol.
Thank you,
Good
Amol.
day to everybody.